What's up, guys? Eric here, Mr. Fired Up Wealth. Want to bring you a video today. Market's kind of continuing to go down. Let's talk through it. Let's do some real talk today, a little different perspective on the camera. Hope you guys are doing all right. I'm seeing a lot of noise out there, guys. I mean, you turn on CNBC or you go on FinTwit or whatever, and it's the same narrative over and over and over again. And there certainly are risks right now, guys. There's risks with World War III. And of course, we already had really bad inflation, and this whole Russia war is dumping fuel on that fire. So there are risks, and I'm not ignorant to those risks. The difference is I'm an investor. I'm a long-term investor. I've been doing this almost 25 years, and I'm looking to accumulate shares and hold. And I know that it's not for everybody, especially when the entire world is all telling you, sell your stocks now, get out of your stocks and wait for 10% lower, try to time it. It just doesn't work that way, guys. So if you happen to have a crystal ball and you sold maybe in November at the highs, congratulations. But most people that are getting out now, they're going to have a hard time getting back in. Look at Berkshire Hathaway. Berkshire Hathaway, Warren Buffett talks about how that business, Berkshire Hathaway, the stock, lost 50% of its value on 3 different occasions. And we're talking about Berkshire Hathaway, not a hyper growth stock. And, if you look at some of the interviews out there, Buffett basically just shrugs it off like, hey, I know it's going to be worth more later. I'm not going to worry about it. Just think about the future and move on. And it's hard to do as an investor. It's hard to look at your portfolio going down. You buy a stock, you try to think it's the bottom, you try to time the bottom, it goes lower. You buy a little bit more, it goes lower. You run out of cash, you get discouraged, you get disgruntled. Here's the thing, guys. If this whole year trades, sideways to lower, it's a great year to accumulate. High quality companies are going to bounce back. Some of the businesses that are really, crap businesses, they might not come back. But if you're invested in high quality, some of this stuff's being devalued, revalued at a lower valuation, but it's going to grow into itself. It's going to be worth more later. I look at my portfolio around 80 holdings. I'm very confident in what I own. And I added some more today in a couple different names. And I'm continuing to add the best I can. And of course, every time you add, it feels like it goes a little bit lower, a little bit lower. And you have to be careful. You don't want to catch a falling knife. I'm buying, micro doses, like 10, if I want $1,000 or $10,000 on a position, I'm buying, $1,000 at a time. And I've got stocks that are red. I've been investing a long time, so the large majority of the portfolio is still very green. But anything I bought really in 2021, like you guys, I'm in the same boat. The new IPOs, things like that. And I did my best to be patient on a lot of those, knew that they were expensive, but, still didn't time it perfectly. So at least the way I look at it, I didn't buy the tops in any of them. Certainly could have got them less expensive, but I'm continuing to add, accumulate, lower the cost basis. And I'm really thinking about long-term. My portfolio, I'm holding until 2030. And that's what I'm focused on right now, guys. I don't need that money before then. So QQQ, the Nasdaq 100, let's just look at a chart here, kind of see what's going on. You can see this is kind of zoomed in a little funky, but we really just kind of retested. We actually broke that slightly today. You can see we got down to about $317.50. That previous low was a little bit higher, around $318. So we're kind of just retesting this February 22nd low. Now, this was that wonky day where we kind of came down to this level and then bounced all the way up here to $340. That was a wild, wild move. It doesn't look like that's going to happen today, and I don't think it's going to happen. The Fed's going to meet this week. We've got the PPI numbers. We've got, tensions with Russia and Ukraine. We're adding China in the mix, plus there's China COVID fears now. Every time you turn on the news, it's something more to add fuel to the fire. I saw something over the weekend, a KFC 16-piece meal is like $55 or $60. That's getting a little bit ridiculous. And inflation definitely is here. It was already bad before this Russia-Ukraine war. And like I've said many times, it's like dumping fuel on that fire and making it worse. But here's the thing, guys. You can't predict what's going to happen next week, next month, even next year. But that high-quality companies are going to be worth more over time. If you're holding these stocks for 10 years, 20 years, you're going to be worth a lot more money when the dust settles. And it's easy, your brain, psychology, it's easy to say, well, I should have done this. I should have sold in November at the highs and then bought back, or I should have waited to buy this stock, should have, would have, could have. You can't change what's happened. All you can change is today and the future, So if you believe in the companies you own, have conviction, all you can do is do your best to try to accumulate shares Or if you think the market's going to go lower, you sell. I've seen more and more YouTubers basically panic selling, which I would call not the best time to sell. I can't call a bottom. Maybe the Nasdaq goes down another 5-10%. Looking at the chart, guys, I think you'll probably see a possibility of something like a 305. Let me just pull this up. So this is possible here, this 305 line down here, and we're at like 319. But you can see it's bounced nicely off of this range today, this 318 level. So, who knows? Maybe it holds up to that level and it goes higher. It's hard to say. Most people are going to tell you it has to go lower. The fear and greed index is between 13 and 15. The VIX is still high. Oil has come down a lot, though. Oil has come down significantly from its highs. If you look at a chart of oil, let's just pull up oil. You guys follow oil at all? Probably not. So this is WTI crude. I mean, if you look at this, it got up to $130 a barrel, and we're actually trading down around $100 right now. It actually got down to $99 and popped, and it's hovering right around that $100 a barrel. But it's come down almost 30% as well. So people that are bet on oil on margin, they're getting their accounts blown up. And I said that when we got to $120 a barrel, I was like, if you're long on oil, you probably need to step back from it, because it's not probably going to go to the moon overnight. It ran so hard, and it's got to have some contraction and pull back. So, I mean, that's where we're at, guys. I mean, I wish I had a crystal ball to say, Eric says, wait till next Tuesday, and that's the bottom by exactly at 11 o'clock, and here's all the prices. Right now, there's no way for anybody to tell you. If anybody tells you they can time the bottom, they're full of it. They're lying to you. Nobody knows anything right now. And all we can do is our best as investors to think about the long term and try to build that portfolio. I call it a blueprint. Build that blueprint the way you want it and build that house. You've got your ETFs, you got your dividend stocks, you've got your growth stocks, you got some spec, you got some cash. Of course, now you're probably running low on cash, but seriously, the other thing I want to talk about real quick, guys, I've seen a lot of people now chasing ETFs and dividend stocks here. If you look at like Peter Lynch, we did a video last week. I did a video on Peter Lynch, Principles to Success. And one of those principles to investing success, if you haven't seen that video, go check it out. He talks about when the market's beat down to buy the highest growth names. Now, of course, he wasn't a hyper growth investor. He was more growth at a reasonable price. So a lot of people call him a value investor, but I think of him more of a GARP, growth at a reasonable price type investor. So he's kind of a hybrid really between growth and value. But you think of like the hyper growth stocks, you think of SaaS stocks, that was not, that would not have been Peter Lynch's cup of tea. But still, those type of names, yes, they have been beat down. They might go lower, but those also have growth. And so over the course of 3, 4, 5, 6, 7, 8, 9, 10 years, the chances that those high quality names, those best of breed SaaS names will be higher is pretty high. Now, if you don't have conviction in those names, find something else. There's, tons of other areas to invest in. And that could be fintech. You can look at like a PayPal. PayPal, I would consider a pretty safe stock compared to a lot of the hyper growth names we talk about. That thing's beat up really bad. Facebook, I mean, maybe you don't like Facebook, but you look at PayPal, you look at Facebook, there's tons of other names that you can go after. There's tons of other names, not just the hyper growth like SaaS names. You've got fintech, you've got, even if you look in the e-commerce space, a lot of great values in the e-commerce space right now. And yeah, can they go lower? Sure, absolutely. Chinese tech stocks have been absolutely crushed. I've been warning you about Chinese tech stocks for months when they were much, much higher. And everybody always rode me, why don't you, buy Alibaba at this price? Why don't you buy this, stock? Why don't you buy that stock? And I said the risk is too extreme, and that even if you thought those stocks were worth more, that the sentiment of the market was going to drive them lower. Now, of course, growth stocks in general have been beat down, but I'm not necessarily worrying about those names being delisted, whereas the Chinese names are. And I'm not here to start an argument. If you own a bunch of Chinese stocks and you think the market's wrong, that's totally fine. I'm not bashing China or Chinese stock investors, but I am just simply saying that I've been very adamant that Chinese tech stocks still had a lot of risk, that they could go a lot lower. And people told me I was wrong, and I was not wrong. They're a lot lower. Have I been wrong on other names? Absolutely. So I'm not saying I'm perfect, but with Chinese tech stocks, it was very obvious, and you see what's happening. The K-Web and some of these names are just absolutely crushed, and there's probably further downside to go. I saw Alibaba was trading closer to $80 a share today or something like that. I mean, we're erasing years of performance just going back in time. And you might see that with some of these other growth names. You might see them continue to get hit, especially stocks that don't have earnings, that have high multiples. You think of, price to sales ratios. You think of, the hyper growth stocks like in the SaaS world. They certainly could go lower. You saw some of the names get hit today. I can't mention all the names because I bought some of them, but that's what's going on, guys. I just wanted to make this video to talk through it because I know that some of you are struggling. It's easy to just want to give up on the market and say, screw this. But this is what the market does. And this is why most retail investors quit. They give up, and then, stocks rally again. Who knows when that is? But when they rally again, the retail investor gets back in, chases that FOMO, rinse and repeat, lose money. So just be really careful. I'm not a financial advisor. I can't tell you what to do with your money, but selling some of these names here, in my opinion, isn't the best idea. If you have no conviction in the stock, different story. If the story's changed, you don't believe in the company anymore, you want to, basically throw in the white flag and say, I was wrong on the stock, so be it. That's your prerogative. But if it's a high quality company that you really believe in, you've done a lot of homework on, you've got conviction in it, and the stock's lower, you have to ask yourself, is the stock broke or is the company broke? If the business is broke, then you probably want to sell. But if the stock is broke, it's okay. It'll fix itself with time. This is not abnormal to have market volatility, to have a market run hot and to sell off and try to find, a new value, especially when we've been pumping liquidity. You think of all the quantitative easing we've done over the years, all the cash that we've pumped into the economy and the stimulus and things like that. That's created some of this inflation. And it's easy to blame Russia. We created an inflation problem, and then Russia dumped fuel on the fire. And every time you turn around, you have more bad news. China, COVID, and now Apple factory might get shut down. Some of the parts that are made for Apple iPhone could get shut down in this region in China off of COVID, and so on. So every time you turn on the news, it's like more bad news, and the market's not going to recover when there's nothing but bad news. The sentiment's really bad. It's as bad as it's not. It could always get worse. It's not as bad, quite as bad in some areas. It's like, say, March 2020, but this is very similar to like 2018, where the market just kept going lower and lower and lower, and it got so frustrating, and it took months to kind of work itself out. And the same thing was going on back then. Not exactly the same, but we had, basically the Fed was raising rates. We also had a China trade war, so we had a lot of geopolitical tensions there. So not exactly the same environment, but very similar when you think of 2018. And that's what it feels like to me. And I remember in 2018, I kind of just, at a certain point, I said, screw it. I threw the rest of the cash I had in, and it happened to be pretty darn close to the bottom. And I was really happy, even 6 months later, a year later. Most of the time, if you look at the performance of the S&P 500, I think this is the fourth or fifth worst performance for the beginning of a year in history. And I think every one of those four or five times that it's happened, we closed the year higher than we started. Now, I can't guarantee that's going to happen. You can also look at things like recession. The recession word, if you turn on CNBC, comes up every 5 minutes. There's a possibility of a recession because inflation can do nasty things in the environment. You got gas prices at $9 a gallon, and you got food that people can't afford, and it's going to change consumer spending habits, and it can make a trickle down effect. As of right now, the workforce is actually pretty healthy. The economy, has some signs of weakness, some cracks that you're starting to see, but it's not proven. There's probably a 20% chance of a recession at this point, but it certainly is there. There's a chance it could happen. Now, in a recessionary period, that's a whole different story. But you look at recessions, you look at interest rates, growth stocks actually perform well. What hurts growth stocks is that inflationary environment. So if inflation can come down on its own, whether that's through the wealth effect or whatever it is, you could see growth names do very well over the next several years. And if I look at something like, some of the growth names, the hyper growth names, the Cathie Wood names, those might not be back in fashion anytime soon. But if I zoom the lens out, look 5 or 10 years, there's a good chance that those stocks actually outperform the greater indexes. There's a really good chance of that, guys. So if you have not subscribed to the channel, guys, subscribe, click that bell to get notifications, drop me a like and drop me a comment. This is just a real talk I do once in a while just to basically lay it out there. It's like a personal diary. Like, here's what I'm thinking today. Hopefully it helps with your investing journey as well. At the end of the day, it's your money. You got to do what's best for you. But these are my thoughts as of this Monday, the 14th of March, 2022. Hope you have a great rest of your day, guys. Take care.